What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is April 30th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action in the indices for month end. We're going to go under the hood and check out the sectors and style factors. We'll talk about some of my trades for the day, including a Hail Mary Tesla month-end miracle, and then we'll wrap up with our options order flow. Before we jump in, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in here and let's get to it. All right, so today, we had month end in the markets. We talked about this a little bit yesterday in the aftermarket. And then I also talked about this in our pre-market session. On month end, a lot of times, it's these big institutions that they are trying to balance their portfolios. They're trying to get their risk metrics in line. So there's a lot going on that's purely mechanical. And it's very tough to divine, a solid reasoning for everything that's happening. A lot of it's just, portfolio risk, rebalancing, all of that good stuff. Typically, every single month in 2021 has been pretty negative around month end. We haven't really got much negative price action in the market over the last month. So to me, I was coming in with an open mind, and I was of the mindset, if we get some weakness at month end, that's not really all that big of a deal, assuming we can hold, key supports, things of that nature. So if we look at the ES right here, you can see we pretty much closed right at that 5-day exponential moving average. We had a pretty scary dip here, or you can see we hit this 41.67 level, but overall, you can see this trend. We're drifting higher and essentially moving sideways. If we look at the hourly chart, I was watching this throughout the day. You can see here, so we did dip within this weekly value area. And I actually bought some short-term SPY calls when that happened. In terms of our overall box scores, we had the S&P 500 finish down 0.66%. We had the NASDAQ QQQ finish down 0.66% as well. Wow. And then we had the IWM finish down 1.36%, and we had the Dow Jones finish down 0.48%. So it was kind of like looking the whole day like, oh my gosh, this is it. This is the big one. This is where we're going to slip. Then you can see, we had a really high volume candle right here at the end, and we kind of pushed off those lows, and lo and behold, we held the support again. So you can see, talked about this in the morning as well. We've tagged and even breached this support level so many times during this week. Pretty normal. So yet another tag of that support, and we bounced right off. If we pull up our NASDAQ, you can see NASDAQ here actually closed below the weekly point of control, so not looking quite as strong, but also got that bounce at the end of the day. And if we look here at the overall chart, we pulled back to the 20-day simple moving average, so we're into support. The market is no longer, in this crazy overbought condition that it was in the middle of April. Then we'll pull up our Russell. Russell was the weakest index today. You can see the Russell closed down, tagged that 20-day simple moving average, and also got that little bit of a pop later in the day. As I was watching the options order flow, there were a lot of put bombers that were coming in and hitting the Russell. But you can see even this one, we dipped into that weekly value area and we pushed out, and now we are pretty much at support. Finally, we have our Dow Jones here. Very similar story. This one tagged the weekly value area low, and we pushed out in the last little bit of the day. So overall, it's never really like, oh my gosh, I had so much fun with this red market. But in the grand scheme, not too crazy. One company that reported earnings, so Amazon, I saw a lot of traders that were literally like losing their minds over Amazon today. And it was like, oh my gosh, they reported a good quarter and they didn't go up. And it was like, it was like the sky is falling. Amazon ran I believe it was like a good like 10 to 18% into the print. So look at where Amazon was in the beginning of April. Look at where it is today. It's safe to say that some of the players that were purchasing this in April were anticipating good earnings, and some of the people that purchased here and here and here and here and here. So people are like, what just happened? They reported and they didn't go up. And I mean, Amazon has gone up a lot. So I actually have an Amazon earnings trade on, and I sold a put spread, down here somewhere. But yeah, I don't think it's that big of a deal that Amazon didn't really have, a crazy blow-off move on their earnings. Let's pull up. We'll go under the hood here. If we look at our market breadth, you can see breadth was negative for all the indices. So there definitely was some selling pressure today. And one thing I noticed early on in the day was, okay, month end is a little bit weak, which is fine. My game plan was to get long into month end in anticipation of some of those first of month flows. In the beginning of the day, it was looking fantastic. It was like, all right, yeah, breadth is improving. Meanwhile, the indices aren't really moving that much. It's like this is looking very bullish. Then we got the headline from Kaplan, saying, hey, I do think it's time for the Federal Reserve to start tapering their asset purchases. And he cited, froth in the housing market. So it was definitely just something the market doesn't want to be hearing, doesn't want to see. Powell said, hey, we're not thinking about tapering asset purchases yet. Bullard, about a week ago, also said, hey, I think it's time. And now Kaplan is saying it's time. So at the Federal Reserve, it's like this multi-headed behemoth where when they want to change up their dialogue, they have, these multiple heads that can say different things, and in doing so gradually change the dialogue. So I think it was kind of smart, actually, that at the Fed meeting itself, Powell said, we're not even thinking about it, don't even go there. Because heading into those Fed meetings, pretty much every asset manager, every trader, they're all hanging on every word, and they have a big game plan as to, like, if this is said, this is what we'll do. Under this scenario, we're going to dump everything. So it's like everyone is like ready on a trigger to essentially go risk off at that meeting. So I think it's smart that at the Fed Wednesday, they said, hey, we're not really thinking about it. But then very subtly, another Fed speaker came out and said, hey, I think it's time. So it's almost a better way of going about it where market participants, they can sort of make those decisions now as to how do they want to be positioned if and when the Fed starts tapering, rather than like just this one big like, boom, here's the schedule, and everybody kind of acts at the same time. But yeah, once I saw that, those headlines, that sort of put a damper on everything. I was like, man, the market, who knows how it's going to interpret this, and it's also month end. So if we look at our FinViz heat map, you will see we had, some big sell-offs in a bunch of different areas of the market. So the banks, which had been very strong the past couple days, and the financials selling off, energy, which had been very strong, sold off, and these semis, which had been very strong as well, or I wouldn't say very strong, they've been holding up okay. They also sold off in a big way. And the FANG names, which have been so super strong, they also struggled as well. Tesla just pulled a Tesla today, and we'll go through that when we look at some of my trades. But yeah, you can see very mixed breadth, overall very poor breadth. And this continues with this theme that we talked about yesterday, where in the 2020 market, you could see an asset or a sector or style factor that was up 4%, 5% in a straight line and go, all right, just got my buy signal and everything would be okay. In this market, what I'm seeing is if something's very strong for a couple days consecutively, it can get hit really hard, and vice versa. So looking at our sectors here, the MSOS cannabis ETF has moved to our top slot. And it's very unusual. The cannabis names, they've been in a downtrend for quite a while. And also down here, the solar stocks were in our top slot a couple of days ago, but they pretty much got decimated, in a few short days. So let's pull this up and you'll see what I mean. So the solar stocks, they had a really nice run. They kind of exploded for 4 days consecutively, and then they just gave it all back in the next few days. With MSOS, could the same thing happen? Absolutely. You never know. Well, when we take a look here, MSOS has had a really nice rally up to the bottom of this monthly value area. So who knows, maybe this is time where MSOS is going to break this downtrend and really make a sharp move higher. But at the same time, I'm looking at it and I want to be a little cautious just because I know that's the way the market has been, where, a lot of times if you're buying this extended range candle, you've already kind of missed the move. So I'll definitely be looking at some of those names this weekend. And I might have one of those names on our weekend watch list. I send Pristine Capital members. So those are our sectors. And then, you can see the semis got hit very hard. Financials, which have been very strong, hit hard. So, a lot of these different areas. Semis down 2.79%. So part of me, when I look at this, I'm like, okay, this is probably the time to buy the semis. Probably not the time to buy cannabis or some of these other areas. We'll have to see. A lot to think about this weekend. Then our style factors, you can see here, we have the cyclicals down 1.25%, and we had high beta down 1.1%. Those were our loss leaders. And if you look at the ones that held up the best, I see Minvol was only down 0.19%, and I see growth was also down, only 0.61%. So those were our relative leaders. And looking at some of my trades for the day, I believe I took these as snapshots. Let me see. Okay, so for options trades, like I said this morning, I wanted to get long into the month-end weakness to see if we get, some sort of auto gap Monday or, some beginning of month flows. See, I took some XLK calls in the morning, the June 18th, 140 strikes for $4.50. Let's see, I believe XLK closed, pretty much on the lows here. So XLK, we'll have to see if it holds this support. I definitely think this XLK is a little bit oversold. So we'll see how it does into next week. And then we'll take a look at some of these others. I got long in NVIDIA, 607 spot 5 by 617 spot 5, May 7th call spread for $3.98. And this was when I was seeing breadth turn. I was like, oh man, this looks like an incredible setup. The semis are oversold here. Then once those Kaplan headlines came out, I was like, all right, let me reassess here. I got a really nice trade location on my call spread. So I was able to close out. Literally, I entered this at 10:07. I closed out half of it at 10:16, literally 9 minutes later, for $4.80. I'd paid $3.98. So with that, it's like, I've been in this trade for 9 minutes. And it's already given me, almost a 25% return. So, when I see bad things on the tape, I have to take some of that off. Then I closed the remaining half of it about 30 minutes later for $4.55. And I just said, want to watch my short-term options risk in case we get some sort of taper tantrum. So for that, I was like, would I have loved to just keep this on and, turn into a really nice winner? Absolutely. But, I have to be disciplined, and when I see a risk on the tape, I have to act accordingly. So that was a nice little winner. And then NVIDIA ended up closing, way lower than that. So NVIDIA was down, closed down 2.06%. I think this one is also pretty oversold, the semis group. So I'll probably be looking for these, next week. NVIDIA closed at around like $600. And then, so what did I do? I also got long a diagonal call spread in Twitter. I got long the June 18th 56 strike call, and I shorted the May 15th 61 strike call for a debit of 360. This is really just a trade essentially saying I don't think Twitter is going to completely slip into the abyss, and I sold the near-term volatility. So by selling that 61 strike call, even if we get some sort of push higher in Twitter, that call that I sold is going to decay very quickly. So it's essentially like allowing me to finance, a very cheap call for June. But yeah, Twitter ended up closing, right on the lows. And, they had a disappointing quarter. But I looked through the numbers and the numbers were okay. I think it was just like everyone was expecting major growth. They're down about 15.16%. So I was like, I'm going to go for this one and, take a long bias trade where I can sell some of the volatility. Sounds more like a special situations trade. And then, I closed out my iron condor. So for Tesla, I took an iron condor into earnings. I was short an iron condor. And as part of that, I sold a $10 wide put spread. The 707 spot 5 by 697 spot 5. I closed this out for a 14-cent winner, so nothing crazy. A little bit better than a scratch. But I put here, it's a month-end miracle. Tesla, just had horrible price action. And I noticed, man, the max pain level is so much higher, but this thing is really just struggling. Tesla ended up putting in a crazy bullish engulfing candle. And I think this does have to do with the max pain and the pinning for options expiration. With this one, if I had held on to it, this one would have been a max winner. But as I was kind of looking at the way the tape was playing out, I was like, I'm not going to push this one. I'm fine with, a small winner, because this one could have just as easily, turned back around and really gotten me for the day. Whenever I have those exposures where it's like, it's all going to come down to the last 5 minutes of trading, a lot of times I try to just cut those. But yeah, this one, essentially a month-end miracle. I thought I was going to take a max loser on that one. So close that one out for a small winner. Then I got long some SPY calls. I was able to take these essentially right as it looked like we were going to slip into the abyss. So for these guys, I got a nice trade location as well. And I decided to hold these into Monday. So yeah, these, I believe they're trading, I got in 578. I think they're around $6 now. Yeah, because I got the 417 strike when we were down here in this weekly value area. So yeah, those, if we get a nice little boost for the beginning of the month, maybe I can monetize these SPY calls. But I really liked that trade. And then I had an SPX HAGE on the books. That's another reason why I was able to take this SPY trade, because I knew, hey, I have a hedge expiring today, and why not put that hedge to good use? I'm probably going to lose the hedge in terms of the trade, but that's really what I put it on for. So I had a half of a hedge left. I had monetized some of this April 30th 4140 by 4150 call spread. I was able to monetize half of it for a very small winner, and then the remaining half expired, which is cool. And then for stock trades, I actually nibbled on some more Roblox. Roblox is a name, I've been doing a lot of work on it, and I had a very, very tiny starter position, a less than 1% position. And I was like, I want to beef that up. And there's no better time to do that than when the market's kind of spilling over like this. So I entered a little bit more Roblox. This, I really like this one for the long term. And you can see it's right around the 20-day simple moving average, and actually had, a pretty red candle of price action today. So yeah, I really like that one for the long term. And I think they report earnings on May 10th. That about does it for my trades for today. I see we're already at 19 minutes here. Really quickly, I'll pull up some of this order flow. And yeah, the Tesla call bombers, they were out throughout the day sporadically. So we have this one, NGA. Let's take a look at that. Usually I like to pull up names that I don't see very often. Yeah, this NGA looks solid here. So you can see this is Northern Genesis Acquisition Corp. I'll probably take a look into this one this weekend, to be honest. It's trading at $18. Most of these SPACs are down at around $10. And it's combining with Lion. What is this? The Lion Electric Company. Okay, that's interesting. I might take a look at this a little bit deeper over the weekend. And then, yeah, the Tesla, we had some IWM put buyers. That was really pushing IWM a lot lower. They were coming out throughout the day. We had more hedgers coming in, pretty much on the lows. And then towards the end of the day, we had some call buyers coming in. You can see these guys in size for SPY. They have the 421 strikes for May 14th. So they're expecting some sort of like mini blast off. And you can see towards the end of the day, some more mixed activity. But that about does it for this market recap video. Hope you all had a great trading day, an awesome month end, and I hope you all have a great weekend as well. I will see you all on Monday.